So this is a very important lesson now about zones that have worked, but if you don't have proper confirmation, then that's no trade for me. I don't care if the zone produced a sick fade, a nice rally, it doesn't matter, but if it did not give me my signal to take that trade, I can't look at it like I missed out on it. I have to look at it as the market moved without me. There's always going to be another opportunity. Just because you missed one really nice play doesn't mean that in an hour, tomorrow maybe there's going to be a better play. So if you missed something, even if it did give you confirmation, but you missed it, who cares? The market's going to be here every day. But if you missed a trade because it did not give you proper confirmation, you can't look at it as you missed it. You have to look at it as the market left without you, and it wasn't meant for you to actually enter. So here we have Netflix, the first one I want to go over, which is a 2-hour supply zone. Now, some may argue that we came into supply. Let me do this for you guys. So we came into supply. Let me remove this 2-hour mark. Keep in mind, this is a 2-hour zone. Came into the supply. This right here, the third candle, shows no signs of sellers or bears stepping into the market. Really no confirmation here. The next candle, we start coming down, but this moved too far away from my stop loss. I can't be risking 5 points when low a day is about 6 points away. And the risk to reward is not really 2-hour benefit here. So I wouldn't have taken this trade to the downside just because I would have been chasing it. The next candle, we started moving upish, next one upish, and then we dumped. So this is where we made the lower high, but at the time that this was being put in, it didn't look like we were making a lower high. The next candle completely dumped. I don't really see a valid entry anywhere in this area. And after that, the market, left without us. So right here was a trade that worked out pretty nicely. Hindsight, after the chart has been printed, obviously it looks like it's nice. But while the market was actually trading, there was really nothing to confirm it, nothing to really tell us sellers are present, and nothing to really give us a good enough confirmation to actually enter the trade with small risk. So here we have Facebook. It's a 1-hour supply zone from the chart on the left. It's a used level because the day prior we rejected. Another day that I want to mention, we came into the zone, first 5 minutes we rejected. Now you all know I don't trade the first 5 minutes. It's a complete gamble. And then the next couple of candles, we came in, didn't really give us nice confirmation. We're just trading sideways in this area. Nothing really to it. We tagged the zone, and next couple of candles we rejected and the market left without us. But there was no confirmation anywhere in this area right here for me to take that trade short. Therefore, it's an avoidable trade. I don't take it, and it moved without me. Who cares? So here on the left is a 45-minute supply zone on Roku. The following day, we come and test the zone. Now, this is a 5-minute chart. We rallied pretty strong to this level. Then the next candle was a basing candle. So at the time, if you're zoomed out on this, it looks like a valid rally-based rally. You can't argue the fact of that. So again, not really looking to take the trade short. Nothing to it. We do have strong buying volume. Price is stalling, but just the way that it traded, came down the next candle and then dumped, kind of moved away without us. So this again is a trade that worked, but there was just no valid confirmation to take that short. Then there's some plays that happened too fast. So we had Boeing that sold off from like 167-ish all the way down to 164 in a matter of 15 minutes. Look at the heavy volume. Again, that's something maybe you could argue on why you did take this trade. But in my opinion, you're trying to catch a falling knife here. The market's selling off aggressively, hard, with very strong volume. We do come in with very, very heavy selling pressure at the 2-hour demand zone. But the next candle was a huge, strong green candle to the upside, almost wiped out all of its losses from the previous candle. So because of this, you're really going to have to buy up here. And if you're buying in this area up here where I marked, and your stop is, let me just remove this, and your stop is below the low, you're just risking too much. It's too much risk for my comfort, and I'd rather just avoid it and just try to focus on a different setup that day. It just happens way too fast, and there's a lot of plays that happen like this, where it comes down, it comes up, and it reacts pretty fast. It moves away from that level too fast for me. It skews our risk to reward, and anything that skews our risk to reward, we're not going to be able to afford a lot more losers that we can do with smaller risk. Here we have Boeing off of a 4-hour supply zone. We opened up in this level, so the market was gapping up, and you have to put yourself in, again, think like a retail trader. Yesterday was a very strong rally, moved from 196, closed at 109. So a very big move intraday. Then overnight, we were gapping up from the 210 level all the way up to 226. So gapping up another 16 points. You have traders that are like, oh, this thing's going to keep ripping at the open. If you don't realize we're inside of supply and you're buying this long, you're just providing liquidity for everybody that's hitting the bid. And affecting the market to the downside. So opened up in 4-hour supply. There was no confirmation to take the trade short here. Again, the first 5 minutes. And number two, nothing against it. But if you're trading the first 5 minutes, it's a complete gamble. You're 50-50. And if your odds are 50-50, that's not a good win rate or type of trade to put your money and invest and trade towards. So did reject the first 5 minutes. We came all the way down here, but the market's so far down from supply, it doesn't really give me a good entry. Therefore, there's no confirmation. Therefore, I'm not taking this trade, even though it was a really, really sick all-day fader from that level. Last one I want to mention is Microsoft daily supply. We rallied at the level. it looks better as the market's actually developing. Rally into the level, looked pretty strong. Next candle, we rejected. No reason to take this trade short. Yes, we are at supply, but nothing really indicating that sellers are in control. The next candle, we dumped down. Now it gets a little more interesting towards the short side, but I'm not comfortable buying all the way down here. It's too much of a risk for me. And my goal and our goal as traders is to get our entry as close as possible to where we're going to stop out. And our stop out point should be an area on a chart where it makes sense that our original thesis will be proven wrong. So if I'm buying all the way down here, my risk is just too much for me. So it did come down, continue to come down. So this was a nice trade, a nice fade from this daily level, pretty much all day fader, but it's just something I have to avoid because it didn't give me a good area to enter. You're going to get tons of trades like this. The key is being patient, accepting this as a factual information, and just focusing on the next trade. There's tons of opportunities. If you let this get down on you, it makes you think differently. You get emotionally messed up. You're like, oh, I missed out. I could have made $500 on this trade. That's going to affect your next decision. So don't let it affect it. You have to be like a stone, be emotionless when you're trading. You're going to have plays that you miss. You're going to have plays that you hit. It's a tough game. Just you have to have confirmation in order for me to take the trade.